You're about to hear something the mainstream financial media will never tell you. Something the biggest bullion banks, silver manipulators, and even government agencies have tried to hide for decades. Once you understand this, you will never look at silver the same way again. My name is Marco, and this is Macro Truth. If you want to stay ahead of the biggest financial shifts, hit that like button and subscribe. Trust me, the next 20 minutes will change everything you thought you knew about money, supply, and demand. Let's start with a simple question. When was the last time you heard a news anchor warn you about a silver shortage? Never, right? Instead, they tell you about inflation, interest rates, or maybe the stock market. But silver? That's a forgotten metal. Or so they want you to believe. Because behind the scenes, something terrifying is happening. Industrial giants are scrambling to secure silver contracts. Mints are running out of coins. The London Bullion Market Association, caught in a quiet but desperate scramble for metal. This is not a conspiracy theory. This is data. This is reality. Let me give you the first piece of data that should make your heart race. According to the Silver Institute, global silver demand exceeded supply by over 250 million ounces in 2022. Think about that. 250 million ounces. That's roughly a third of global mine production. In any other commodity, a deficit like that would cause prices to explode. But silver has been held down by paper markets, by massive short positions on the Comex, and by an army of algorithm traders. But here's the thing. Paper cannot satisfy industrial need. And right now, industrial need is becoming a monster. You see, silver is not just a pretty metal for jewelry or coins. It is the most electrically conductive element on the planet. It is absolutely critical for solar panels, electric vehicles, 5G technology, medical devices, water purification, and literally every computer chip. The green energy revolution that everyone is talking about, it runs on silver. Every single solar panel requires about 20 grams of silver. Every electric vehicle requires about 50 grams, sometimes more. With global governments pushing for net zero emissions, demand for solar and EVs is set to triple in the next 6 years. That means silver demand from the solar industry alone is expected to consume nearly half of all annual mine production by the end of this decade. Half. And that's just one sector. Now, let's talk about fear, real fear. The mining industry is not like a factory where you can just turn a dial and produce more. Opening a new silver mine takes 10 to 15 years, billions of dollars, and endless permits. Meanwhile, existing silver mines are getting older, ore grades are falling, and many major producers are facing labor disputes and skyrocketing energy costs. In 2023, primary silver mine production actually dropped by 2%. 2% when demand was up by 15%. Do you see the problem? This is like a store selling 10 loaves of bread a day while 500 customers are lining up. Something has to break. But here is where the fear gets personal for you. The paper silver market, where traders buy and sell contracts, is leveraged at least 200 to 1 compared to physical silver. That means for every 1 ounce of real silver sitting in a vault, there are 200 paper claims on it. This has been the dirty secret of Wall Street for years. The big banks sell silver they don't have, they short the price, and they suppress it artificially. But history shows you cannot suppress a physical shortage forever. The moment that a critical number of investors decide they want the real metal instead of the paper promise, the whole system collapses. And we are seeing the cracks already. In early 2024, the London Bullion Market Association reported that silver waiting times for delivery had stretched from a few days to over 6 weeks. 6 weeks. That never happens in a liquid, well-supplied market. And then in March of 2024, the Comex exchange had to issue an urgent notice saying they were changing the rules for silver delivery because too many investors were asking for the physical metal. They raised margins, they lengthened delivery windows, and they quietly hoped that nobody would notice. But Macro Truth notices, and so should you. Let me tell you a story. In the summer of 2023, a small online bullion dealer in Texas posted a message on their website. They said, "Due to unprecedented demand, we cannot guarantee same-day shipping on silver products." That was the first whisper. By spring of 2024, nearly every major bullion dealer in America had wait lists for silver coins and bars. The United States Mint, which makes the famous American Silver Eagle coins, had to ration sales to authorized purchasers. In fact, in 2023, the Mint sold only about half the number of Silver Eagles compared to 2022, not because demand fell, but because they literally could not get enough blanks from their suppliers. The blanks themselves were in shortage. Think about that. The US government could not produce enough silver coins because the raw metal was too hard to source. That has only happened a handful of times in modern history, and it is happening again right now. Now, you might ask yourself, if silver is so short, why is the price not $100 an ounce? That is a fair question. And the answer is manipulation. But not the kind that requires a tinfoil hat. There is documented evidence. For decades, banks like JP Morgan have been fined billions of dollars for spoofing and manipulating the silver market. The difference now is that the physical market is so tight that the manipulation is starting to fail. You see, when you have a deficit of 250 million ounces a year, that metal has to come from somewhere. It comes from above ground stocks, from vaults, from old silver bars, from scrap recycling, but those stocks are now at historic lows. According to data from the CME Group, registered silver inventories at the Comex have fallen more than 70% in the last 3 years. 70%. Vaults that used to be overflowing are now empty. And the silver that remains is mostly owned by exchange-traded funds or big institutions that are not selling. So what happens when the vaults are empty? What happens when a solar panel manufacturer calls up their supplier and says, "I need 10,000 ounces by Friday"? And the supplier says, "Sorry, we have nothing"? That is when the price goes vertical. That is when the paper market breaks. And that is where the real fear begins for average people like you and me. Let me give you a comparison that will make your head spin. The total value of the global silver market, all the silver that is mined each year, is about $30 billion. That sounds like a lot until you realize that Apple alone has a market cap of nearly $3 trillion. One single tech company is worth 100 times the entire annual silver production. The amount of capital that could flow into silver if just 1% of global investors decided to protect themselves is staggering. And that is the fear that the big banks have. Once the narrative shifts, once the mainstream media finally wakes up and says, "Hey, there's a silver shortage," the dam will break. And we have seen this movie before. In 1979, the Hunt brothers tried to corner the silver market. The deficit was nowhere near what it is today. Silver went from $6 to $50 in less than a year. That's an 800% increase. But today, the shortage is real, not manufactured. It is driven by industrial demand that is not going away. The world has over $500 trillion in financial assets looking for a safe haven. Even a tiny fraction of that moving into silver would be enough to push prices to triple digits, quadruple digits, maybe more. I know that sounds extreme, but stay with me. This is where we separate opinions from data. The Silver Institute's latest report projects that by 2027, the solar industry alone will consume more silver than all of the world's mines can produce. That means every other source of demand, jewelry, electronics investment, photography, will have to fight over whatever is left. But there is nothing left. Above-ground stocks are already being depleted at an alarming rate. The total above-ground silver inventories not spoken for are estimated to be less than 1 year of industrial demand. 1 year. After that, there is no buffer, no cushion, just a straight line from shortage to crisis. Now, let me bring in another piece of data that the industry tries to hide. The gold-to-silver ratio. It's how many ounces of silver it takes to buy 1 ounce of gold has averaged around 50 to 1 over the last century. Today, that ratio is over 80 to 1. Historically, when the ratio gets above 80, silver is wildly undervalued relative to gold. A mean reversion usually happens. But here's the difference this time. In the past, reversion happened because of investment demand. This time, we have industrial demand that is literally unstoppable. Governments are spending trillions on green energy. The U.S. Inflation Reduction Act alone is pouring hundreds of billions into solar and EV manufacturing. Europe and China are doing the same. This is not a bubble. This is structural demand, and it is all dependent on silver. So where does the fear come in? The fear comes from the fact that most people, including most investors, have no idea this is happening. They are sitting in stocks, bonds, real estate, or cash, completely unaware that a critical commodity is about to run out. And when things run out, prices do not adjust gently. They spike violently. Imagine going to the grocery store and finding that there is no bread, no milk, no eggs, and the store says, "We don't know when we'll get more." That panic, that chaos, that is what happens in commodity markets. The difference is that silver is not just for eating, it is for every piece of technology that powers modern life. When the shortage hits the manufacturing sector, factories will shut down, electronics will get more expensive, solar projects will be delayed, and the only people who will be protected are those who already own physical silver. Now, I can already hear the skeptics. They'll say, "But Marco, you're just trying to scare us so we buy silver from your sponsors." And to that, I say, look at the data yourself. Look at the reports from the Silver Institute. Look at the inventory levels on the Comex. Look at the delivery delays at the London market. Look at the U.S. Mint suspending sales. These are not opinions. These are facts. And macro truth exists exactly because the mainstream media will not tell you these facts. They will talk about the stock market, about crypto, about the latest meme stock, but they won't tell you that the metal in your cell phone, in your car, in the solar panels on your neighbor's roof is running out. That is the fear. That is the reality. But here is the other side of fear, opportunity. Every crisis creates winners. The people who bought silver in 2000 for $4 an ounce watched it go to $50 in 2011. Those who bought in 2019 for $15 watched it go to $30 in 2020. The difference now is that the deficit is larger, the industrial demand is stronger, and the paper manipulation is weaker. The Bank for International Settlements, the central bank of central banks, recently issued a warning about the risks of commodity market dislocation due to concentrated short positions. They were talking about silver. When the BIS starts worrying, you should too. So what can you do? I'm not a financial advisor, and this is not financial advice. But if I were to tell you what intelligent people are doing, I would say they are quietly accumulating physical silver in small, affordable amounts. They are not trying to time the bottom. They are not using leverage. They are simply converting a portion of their savings into a hard asset. That has industrial demand, a history of being money, and a supply crisis that is already here. They are buying silver coins, silver bars, and in some cases, silver mining stocks that are leveraged to the price. But the key is physical silver, because when the shortage hits, the paper contracts will be settled in cash, not in metal. The only thing that will protect you is having the actual metal in your hand. And that brings me to the final part of this story. The fear is real. The shortage is happening. But you have a choice. You can ignore it, like 99% of people will. You can laugh it off as another doomer prediction on YouTube. Or you can look at the data, check the sources, and make a decision to protect yourself and your family. History is full of moments where the crowd was wrong. The crowd said the housing market would never crash in 2008. The crowd said tech stocks would go up forever in 2000. The crowd said silver was dead in 2020, right before it rallied 50%. The crowd is almost always late. And right now, the crowd is not paying attention to the silver shortage. I want you to do something for me. I want you to pause this video, open a new tab, and search for Silver Inventory Levels, Comex, or Silver Institute Deficit Report. Look at the dates. Look at the numbers. Then come back and tell me in the comments if you still think I'm exaggerating. And while you're there, share this video with one person who needs to hear this. A friend, a family member, a coworker who is worried about inflation or the economy. Because the more people understand what's coming, the less chaotic the transition will be. Macro truth is about spreading real information, not fear for its own sake, but the kind of fear that wakes people up and helps them make better decisions. Before we close, let me remind you to hit that subscribe button if you haven't already. Macro Truth brings you data-driven analysis on the biggest financial and economic shifts that the media ignores. Silver, gold, energy, debt, and the future of money. These are the topics that matter. And you deserve to hear the truth, not the comfortable lies, not the manipulated headlines, the truth. So if you made it this far, thank you. Thank you for being one of the few who is willing to look at the uncomfortable reality. The silver shortage is not a theory. It is a mathematical certainty based on production, demand, and inventory data. The only question is when the market wakes up. And when it does, the price will move faster than most can react. Be ready. Be informed. And as always, this is Macro Truth signing off. Take care, and I'll see you in the next one.